What's up, everybody? This is Jacob Sandoval, the head of investor relations for the DeRosa Group. We are transforming lives through real estate. We buy large apartment buildings and generate passive income streams for our investors. We've been doing that since 2005. We currently have 150 million in assets under management and just under 2,000 units in Kentucky, North Carolina, Pennsylvania, and Minnesota. But I'm here today to talk about a different investment vehicle, debt funds. So if you're an investor looking for different ways to generate passive income for yourself, you've come to the right place. So what is a debt fund and why should you consider investing in one? Well, if you've ever owned a piece of real estate, whether that's real estate that you purchased yourself or if you invested passively into a multifamily syndication, you were an equity owner. And if you were lucky enough for that real estate value to increase and for you to sell that property, then you benefited and you cashed in on that equity, which is awesome. But there's also another group that's making money in real estate, and that is the banks. See, most real estate is purchased with a loan, or what's also referred to as leverage. It's one of the superpowers of real estate. You put a down payment, you borrow the rest of the money from the bank, and you pay the bank back with interest, of course. So when you're investing in debt funds, you are in a way becoming the bank. Your investment dollars goes into a fund, and that fund lends money out to operators, and those operators, after they execute on their business plans, are paying you, the investor, back with interest. In its most basic form, that's what a debt fund is. For example, at the DeRosa Group, one of our current investment offerings is the DeRosa Income Fund. With our fund, we pay an 8% preferred return plus profit share to our investors, and we make those distributions monthly. So it's true mailbox money for you, the investor. To date, we've raised over $5 million for the fund, and we've paid out over $250,000 in monthly distributions to our investors at an average annualized return of 9.4%. How many of your investments are paying over 9% in today's market? Oh, wait. The DeRosa Income Fund has funded a variety of deals across the United States. We have a Dunkin' Donuts in our portfolio. We have a warehouse deal in our portfolio. We helped to build a brewery, and we've helped to develop housing across the United States. So this is the strength and the benefit of investing in these funds. When you invest in a fund, you're not investing in a singular deal, but you're getting diversification across a variety of deals across the United States. The DeRosa Income Fund also provides a great deal of flexibility. After being invested in the fund for 12 months, the investment is completely liquid, which means that you can withdraw from the fund at any point in time. And also, we have the option to compound your returns. So if you don't need the cash right now, you can elect to have your distributions reinvested back into the fund, which will allow you to generate an even higher return over time. If you want more information on the DeRosa Income Fund, you can book a call with me in the link in the description below. So the million-dollar question is, are debt funds right for you? And here at the DeRosa Group, we believe so. We feel that investing in the DeRosa Income Fund or debt funds in general can be a great addition to anyone's portfolio. Maybe you're a retiree who really depends on the cash flow that's generated from your investments in order to pay for your living expenses, in which case a debt fund is a great way to generate consistent passive income on a monthly basis. Or maybe you're someone that has a large amount of cash that's sitting on the sidelines. You're not sure where to invest, and it's only sitting in a bank account where it's getting very low interest. You can put that into the DeRosa Income Fund or a debt fund where it's going to generate 9-10% on your money, and you can figure out where you want to place your capital over the long term, but at least put it into a debt fund where you're going to be generating high interest so that you're protecting your nest egg from inflation. Or maybe you're a stock market investor or somebody who has invested in multifamily syndications, which are much longer term investments. You can consider putting money into an income fund to kind of diversify your holdings into a more short-term, more liquid, and more cash flow generating vehicle. So whoever you are, investing in debt funds might be the perfect way to add cash flow and diversification to your investment portfolios. That is it for today's video. I hope you guys learned something and found the information valuable. If you want to learn more about debt funds or see how the DeRosa Group can help you generate passive income, you can book a call with me in the link in the description below. I will see you guys in the next video. Peace.